Hi there, it's Bill with Smart Trades. It's Tuesday, September 13th. It's just after noon Pacific time. And today we're going to take a look at the S&P, the Dow, the Euro versus the dollar on the Forex. And we'll also do a little trading tutorial on that, on the Forex. If you would like more frequent updates, please visit smarttrades.com. And I pretty much on a daily basis do these little trading tutorials live or nearly live via Twitter. At any rate, here's my count, my favorite count on the S&P. I'll be the first to admit there's a lot of ways to count the pattern starting back in February and March. At any rate, this is one that I've been working with for some time, and it allows for a rally back up into the 1250, 1260 area, and then another decline. If you'd like to look at the bigger picture, I do have counts on my earlier videos that examine in greater detail that long-term picture. Here indeed is another alternate count, and this allows for the corrective rally that I believe we're in to have already terminated up around the 1230 area. Here is the very popular and very bearish count showing a wave 2 peak in July, and from there an impulse wave down with a fifth wave failure certainly is a possible count. One thing about failures is they tend to be bullish short term, so the implication is that more than likely we should get a bounce perhaps larger than the one we've had so far. So again, that 1250 area, which was my expectation for some time, is the more likely target, I believe, if this rally is a wave 2. And I think that sometimes we get lost in the minutia of Elliott wave counts and details and so on and so forth. I think it's important to just look at the perspective of the decline from July, and the bottom line is you have an impulsive decline, a corrective rally. Exactly where this corrective rally is going to terminate is up for argument and still not completely clear. We may yet go up and test that 1250 area, which is the March lows. That was my initial assumption here, but it's certainly possible we're not going to get up that high. We have to keep an open mind. The big picture here and the big message is that the next large move is most likely to the downside, and I think a minimum target is S&P 1000, and S&P 950 is certainly within the realm of possibility. 9500 in the Dow is that relative area, and by the way, the Dow has tested that March low already. In fact, it slightly exceeded it, although obviously it's failed to punch through there. And if you will note, the consolidation that we've broken out of, basically from the February peak to the recent break, is about a 5-month long sideways pattern. To me, the indication of that is that more than likely this decline is going to be of similar magnitude. That takes us out to the end of the year, perhaps into January of 2012. Certainly it could last longer than that, but that would sort of be a center point expectation of how long this decline is going to last. And again, our A equals C scenario basis, the Dow comes in around 9550, 9560, perhaps down to 9500. And here again is a little more detail and a shot of that. Here's the March low. And again, we haven't tested that area yet. That's about 1250, just below 1250 on the S&P. But we have tested it obviously in the Dow, and indeed we failed there. Now, could this be a completed correction to that point? Absolutely. And I think we need to be wary of that possibility here. And I would be looking to basically sell weak rallies and terminations of smaller short-term patterns with that in mind. That said, I am not as bearish as some folks out there. And again, I've showed this chart over and over again. I keep seeing interpretations that these are impulse waves down. And I think when you look at the Dow Jones Shanghai, or the Shanghai market itself, and you just look at the basic pattern, up to this point, I think that the pattern off of the highs in both cases of both these declines, I think it looks corrective. Now we break through 300 in a serious way, we'll have to reevaluate, but that hasn't happened so far. Likewise, copper. I think copper is one of the best indicators of what the economy, world economy is doing. And as long as we hold, say, about 47 or so in copper, in this the copper index JJC, I think we're okay. Again, if we start breaking through there and forming more impulsive declines, we'll have to reevaluate. And as promised, here's my little tutorial on the euro versus the dollar Forex. And first thing to bring your attention to was we had tested a resistance and we formed a doji. I'm not huge on candlestick patterns. However, I think doji patterns are very important in particular context. And in this case, the context is that it made a new high, and from there, ultimately, the bottom of that doji failed. Additionally, you can see here we have a clear bearish divergence on this price oscillator. And again, there's our doji. Here's the a double divergence. And here we are with the Euro FX futures. Again, the doji. One thing I will bring your attention to, let me also mention here before I go on, the volume on the doji was very, very low. Typically, I mean, this is one of the main inferences of a doji type pattern is that there's a lack of momentum, that basically you have a range contraction, and indeed that is the case here, and that's reflected also in the volume. Again, long-term picture, folks are calling this an impulsive decline in the euro, and I just don't see it. If you look back to the 2008 high, we have a clear ABC, and the current decline, I think, best counts as a bull flag, and not as an impulse, at least so far. Here again is that doji, and off the doji we have some very tight consolidation patterns. These are the doji itself actually formed resistance for this first one. I like to trade the breakdown of these consolidation type patterns. You sell it on a stop below, perhaps in fact you have a couple of doji-like patterns right in here. You sell a breakdown of that pattern, and then you put a stop above the pattern. Again, we have one here, and this one breaking down longer term support, and in each case you have clear corrective sideways to higher pattern and clearly impulsive declines. Even greater detail, this is right off the top, and you can see we have multiple really tight consolidations, and again the idea here is to trade the breakdown of these tight patterns, placing a stop just above the consolidation, and then you trail your stop down as we go. Very similar pattern on a larger scale in crude oil. Actually breaking the trend line, you have a very tight, relatively speaking, bear flag right at support at 90, and that was also at the long-term channel support, which was obviously broken. Interestingly enough, this chart is more up to date. We have a range contraction forming on this rally in crude. Now, this is the kind of thing that again I look for. If we can get a situation where we can get some low risk tight consolidations that start breaking down, I would look to possibly sell crude. Obviously, if we break through the top of this channel and accelerate to the upside, all bets are off, so to speak. And again, look at this is the ADX that I'm using here, and the ADX I find is probably the best pure momentum indicator. And on this last rally, the ADX is failing way below the previous three peaks. And finally, this is the S&P, and this is a trading system that I've been working on for about the last 20 years or so. And basically, what it does is it uses the advanced decline line, in this case the NASDAQ advances, as a leading indicator for price. And let me show you the results here. I'm going to bring in the performance report, and I make no claims to profitability, so on and so forth, but this is only for educational purposes. and so on and so forth. However, as you can see, this is over about the last 5 months or so. A lot of folks have found that time untradeable. This is a purely mechanical trading system. Again, it basically uses the a little bit of price pattern, and also it uses the NASDAQ advances, and using that as a leading indicator for the S&P. And as you can see, it's been quite profitable in spite of this extremely volatile and somewhat, at least to me, unpredictable market. Nonetheless, the advanced decline line has kind of led the way, at least in terms of this particular trading system. Once again, if you'd like more information about trading systems, trading tutorials, my forecasts, and more frequent updates, please visit smarttrades.com. Hope you're having a good day and have a great week ahead. Thank you so much for watching. Bye-bye.